I want to give you an update on OMNIPOPS for perspective and a couple examples. So OMNIPOPS is what? It's a one-day trade. We get in before the close. We're focusing on stocks and options game here. It can be great for stocks if you like that, or cheap options, and we can make some fantastic returns. I'll show you a couple examples of recent, and so the thing is too, because we're using cheap options with good deltas, when we get a nice move, we can make a very good return. Okay, we have a fourfold return here in Boeing. I'll show you, but we get these big ones in one day from time to time. You know, as we just run the system, and you know, stocks have some drama. So, well, we tend to be on the side of drama in the direction of the drama, which is interesting, isn't it? Okay, so it's a one-day trade. We get in before the close, and we get out before the close the next day. That's it. Why? Well, it's a style of system. It's also designed for convenience, right? Time efficiency. See if you can make money and spend very little time and very little focus and very little worry about your position, then that's very efficient in trading. So, you know, when you get into a position, I would say that most of the work, focus, concentration, and stress is in worrying when to get out, and you know, worrying if you're gonna pay attention to go move your trail stop or exit or set your price target for getting out at, you know, a maximal style profit taking point, right? So anyways, we have this pop style where we know our exit before we enter. Now, that was a popular preaching way back a couple decades ago, but that was just vague. It's like, know your exit before you enter. Well, where are you going to exit? Somewhere out there. So we know when we're going to exit. We don't need to know where. We just get up before the close the next day. So, okay, so, and if you're worried about that scam of a rule, that pattern day trader scam rule, then all you need to do is, well, you don't have to worry about it, because almost all the time we get in before the close the prior day, and we get out before the close the next day. So from time to time, we do have a breakout pop where we enter the next day and we get out before the close the next day. So we don't have a whole overnight, but that's just from time to time when we have some funny stuff going on in terms of the price chart, or for whatever reason. Okay, just, you know, maybe there's some uncertainty by the time we put the signal out, but by the time it closes, we have a different scenario. That happens from time to time because we have to put the signal out to you earlier. So we put the signal out, we try to put it out between 3:20 and 3:30. All right, so we have to register our entries and exits based on that point, because, you know, that's right. That's the right thing to do. That's our cycle. Okay, and if we try to put out the signal at one price and then started putting in our exit and entries different, that makes a mess, and it, you know, brings confusion. If you're looking at it, you're like, well, wait a minute, you said this and that, but you're getting out here and here, right? So we just simply said, you know what, we're going to get in and get out around between 3:20, 3:30 is the target, because that's when we do the signal, and so we just cycle around at that time. You could get in and get out at 3:57, you know, Eastern time before the close, and you know, you can do whatever you want. You can take these as trading ideas. You can run it as a system, like taking every trade, which would be running it as a system. That's our job. You can just have the signals there for idea. Like I said, I already said trading ideas for your own method, but also for running something to keep you in the game. You know, to keep you focused, keep your energy up, so you trade your method better. So the membership price is, we kept it low across the board at this point in time because, you know, the economy, everything's falling apart and people are more and more cash poor, but hopefully that'll change soon. And so it's a pretty low fee. It's like 99 bucks. Okay. So now let me get on to the examples. Oh, I wanted to mention that we added QQQ and SPY. You know what? If you have a stock that tends to move well with a good range, a follow-through range from day to day, and good options, you can let us know, and we can look at running the system on that. Okay, so you know, do let us know. We're going to be focusing, like I mentioned before, mostly on stocks and options. I think we're not going to, you know, the Nadex thing, I don't know. I think we're getting rid of it. Yeah, it's just kind of, I can't remember. Anyways, there's a lot of money to be made with options. Okay, we focus on the cheap options, and there's a lot of money to be made in this method, and stocks too. Right. Again, when you get the nice follow through, you have a good math going on because of the cheap, good delta options. We pretty much use the last week options. Okay, we not for the next Monday, of course, but we just measure premium versus deltas, and you know, versus the potential to move. And we just pick that option. You can pick whatever option if you want. If you want to have less premium decay concerns, then you can go out further in time if you want. But we go in the money somewhat, not too far, to mitigate and to give us an offset of premium decay, because there's less premium, first of all, versus an at the money, and we get the deltas. As soon as it starts moving, we get the deltas increasing we're already entering at a good delta. But so as soon as the stock starts moving, we start creeping up really quickly. I shouldn't say creeping. We start moving very quickly, you know, 60, 70, 80, 90, okay, 100 delta. All right. So that's how it works out. Okay. I just copied and pasted this signals. I have a text doc here. I hope you can read it. It's looking a little small. It says January 5 call on Boeing, buying the puts at 4. Okay, 1 day trade. We had a nice pop downwards. Exit at 227, so plus 21 points. You know, it's nice. And so you had our options going up to 1750. You know what? I just got an error. How can we be at 1750 if the price down here went down to 227 and we have the 250 puts? Hold on. Okay, so here's the chart, and we had bought puts right here. Okay, let's get rid of the squiggly lines. And bought puts. And there you go. You can see here, ended up closing down 20, but you know, we got out a little lower at about 330-ish. And so then therefore, and we're at 225-ish right now. Let's go to the Boeing options. So we're 2 points away. So then therefore we can see the puts here for the 250s, and let me just double check. Yes, 250 puts, and we can see here 27. Okay, so we can see here ugly spread, probably just recorded from Yahoo. So okay, so this is at least 2250 because of the 250 strike down to 227.32. So we'll just call it 2250. You can set a limit order, get in between there. So you can have we have an adjustment here. So it wasn't the signal caller could have just looked at the wrong strike. I'm not sure what they did, but so it's almost a 550% return in one day. Not that, you may be thinking, okay, big deal, right? But it's fun when you when you get these days. You gotta cherish them a bit. We don't want to get hung up on them, right? But anyways. Okay, so let's just look at Tesla today. Hold on, let's get the chart. Okay, Tesla had a nice little pop down. We had puts. And you can see here we bought the 235 puts at 3.9. And here's Tesla today, down 7 points. These puts were bought on a Wednesday to give you premium perspective, and the 235s are now at 8.15 on the bid, right? And okay, so we bought those at 3.9. So you can see the double. Okay, Tesla moving 7 point something points is not a big deal. It's kind of like a easy daily thing. But we have Wednesday options with a Friday expiration, and you can see how we use a combination of probability of the bar going in our desired direction, combined with the probability of that stock being able to put in a certain amount of move, and then we combine those factors to pick the option to give us a good chance to make some money. So the thing is, if we pick an option that's far out of time, that's plump with premium and has low deltas, you don't get paid that much in comparison to a higher delta short term in the money option. So we have to weigh the payment, what we get paid when we do get the move, versus premium decay. Okay, so let's look at Boeing's 230 puts. Let's see where we're at here. 230 puts at 3.35. Okay, Boeing is down 2.83. Nothing dramatic or out of the ordinary. And who knows by the close where it will be, but just to get a picture, we bought them at 3.35, and now these puts at the 230s are on the bid. They're at 540. So 3.35 to 540. Okay. All right, so just giving you a picture here. We're getting into the groove more and more with OMNIPOPS. Really like the system. And so, we have these signals going on here. You might as well take advantage of them. And potentially, you could make a lot of money. All right, so you're not going to find out until you try. But also keep the perspective, the time perspective. Some people are so brain fried these days. They get in they usually get in, they dive right into a slower time, a consolidation or something like that. And then if they don't get their emotional temper tantrum after 3 days, they make the evaluation and then they storm out. I mean, it's just really stupid. But anyways, you want to watch it for, I would say, about at least 3 months, get the perspective. Okay, running out of time. See ya.